Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Some of you know me as Triangle Investor from X. I'm very glad to have Thomas Parilla in my show, the president of Parilla Investment Group. I believe that Thomas doesn't need to be introduced, as majority of you knows him and his work. Thomas, I'm very happy to have you in my show, and warm welcome to you.
Yeah, thanks for having me.
Thank you very much. I would like to start with the real estate market. Are you seeing signals, red flags, similar to 2007, 2008 real estate and financial markets crash?
Here in the United States, commercial real estate is an absolute train wreck, and they're keeping it pretty quiet. They're trying to anyway. But the problem they have is it's multiple dominoes will fall if they can't keep this thing controlled. Because the commercial real estate losses are massive. I mean, I'm seeing properties that are going for even 70, 80% discounts. And someone's got to eat that giant loss, and it's the regional banks mainly.
Yeah.
So now you got the problem where commercial real estate's blowing up. The Fed's not helping them any because they're keeping rates higher. And those defaults are now coming back to the banks. So the banks are sitting on massive losses in their US treasuries and now massive losses on their commercial real estate. So the entire regional banking system here in the US is really stressed right now. I think, and that's kind of my thesis, that at some point the Fed, even if they don't want to cut interest rates, they're going to be forced to. The market forces will make them do it because they're going to have to inject liquidity. And if they do that, then they can, of course, then save the treasuries because interest rates should go down.
Yeah.
And then, commercial real estate to get that bump of liquidity, and that should help them. The problem they have with that is a lot of these guys, even the Fed, they came straight from academia to the Fed, or they came from academia straight to politics. They never worked. The commercial real estate market does not turn on a dime. If you start injecting liquidity today, you're still in for quite a bit of pain before the ship starts to turn. So I think we're in for a really tough next 6, 9 months, maybe even a year after the Fed starts to cut. But during that period, interest rates should start to come down. It'll be a perfect environment for gold and silver. They've got a lot to worry about, next year. I was just looking at the number. I believe we've got about 9.3 trillion. Yeah, there's 9.3 trillion in US debt matures next year.
Oh my God.
So not only do we have to take care of our debt that's coming on board now, the new debt, which is about 4 trillion a year, but now you got about 9.3. So you could see, 13 trillion in new debt next year. So whoever wins the presidency here in the US, you got to think maybe they don't want to win because they're going to inherit a nightmare. You're going to have maybe 13, 14 trillion dollars of new debt that's going to hit the books. So you're going to have a lot of pressure on interest rates to go up. So the Fed's going to have to keep injecting liquidity. And as they do that, they just print dollars. And that's my whole reason for being in the gold market to begin with. People always ask me, which way is gold and silver going to go? And I say, well, watch debt. And they say, well, debt keeps going up. I said, well, that's where gold and silver is going to go. Gold and silver is going to track it the whole way. Yeah, I was looking at these numbers. It's really staggering what we've done here in the United States. We have now lost 98.5% of our purchasing power since we left the gold standard. In 1910, $1,000 would buy you 1.95 ounces of gold. Today, $1,000 will get you 0.43 ounces of gold. That's how horrible we have devalued our currency. And it's just a terrible situation. I think one of these days, the citizens are going to wake up and figure out, hey, I just worked 40 years of my life. All I have is 1.5% of it left. That doesn't make any sense. And then, you've got problems. Leaving the gold standard, it was a disaster from day one. I don't see how it helped the United States citizens one bit. When I was growing up, you could have, typically back in those days, the wife stayed home and raised kids. You had big families, we had 4 and that was small. Normally you had 6, 8, 10 kids, big Italian families. And usually just the father worked. And if you wanted to have a good middle class job, you made $40,000 a year, you worked a lot of overtime, you busted your butt, but your family had a nice house in a nice neighborhood. Maybe you had a boat. Maybe you went on a 2-week vacation every year. You had a quality middle class life, and your kids went to good schools, and then they went to college. Now you got 2 people coming out of college, my neighbors. They both have their master's degrees. They're 25 years old. They both work full time, and it's a hard time paying bills. That doesn't make any sense. How how's it possible that we had such a good standard of living back in the 70s on one salary, and today you've got two kids with master's degrees and they're struggling to make a good living today? And
Yeah.
they only have one or two kids now. Forget about having, 4, 6, 8 kids. So we've done that to people, and I think it's just terrible. I mean, right now we're sitting on $34.5 trillion worth of debt, but we're adding about 1 trillion every 3 months. So you're talking about an additional 4 trillion coming in per year. We finally crossed the point where we're now spending more money on our interest on our debt than we are on military defense spending. Now, if we just cross that today, what happens in 5 years when you've tacked on another 20 trillion in debt and you're sitting at, maybe 54 trillion in debt? You're going to have to cut someplace. I mean, you just can't spend forever. And people think that that's the case. It's the old the straw that broke the camel's back. They think, oh, hey, nothing's happened, nothing's happened. They've been hearing people talking about gold and silver their whole lifetime. But you're going to have that moment, just like they did in Germany. I mean, they printed dollars and printed dollars, and one day all of a sudden their currency fell apart. And people that were as rich as Elon Musk 3 years later had no money. They were burning it because it was worth more to them to burn it in the fireplace than to spend it. Down in Argentina, I can remember them putting in their restaurants, they were putting their menus on chalkboards because it was being devalued so fast. While you were sitting there eating, the prices were changing. That's crazy. I mean, we have to go back to a stable environment that's backed by, I think it needs to be backed by a basket of commodities with gold as the anchor. But you need a stable currency, that you can have long term. And I think it's time to put the fiat currency to bed.
Yeah. Tough times ahead, definitely. I saw one of your interviews where you stated, and I agree with that some young generations have not seen a bear market yet in their investment life. So do you see a market correction soon, a bear market starting in 2024 or 2025, since we are in more than 15 years of bull market with minor setbacks?
I started on Wall Street in 1994, so I saw quite a few different bear markets.
Yeah.
Typically, when they come is when everybody thinks it won't come. Complacency comes in. Everybody's making so much money, hand over fist. The dot-com bubble. That was the last one I can remember. Everybody was making so much money day trading, and then all of a sudden, boom, reality hits. How many of these companies really make money? What's the intrinsic value of that corporation? Well, I don't care. The stock's going up. Well, what happens when it goes down? What's the real value of the corporation? And that's where a guy like Warren Buffett always makes out. When markets take off and just explode, the new crowd comes in and says, oh, look at that dummy. He's lagging. And Buffett just sits there and buys intrinsic value. And then when you have a correction, all of a sudden they see how smart the guy is because he's actually holding real companies, real corporations with value. And that's how he's made his living, his whole life. That's how he did it. He bought things that had real value and held them. Now I look at the gold and silver market, and I think that's the next place you're going to find real value. You're going to find assets in the ground are going to absolutely explode because people are going to start to search for supply. Now, I looked at the numbers the other day. The deficit right now in the silver market, we are 215 million ounce deficit in silver. So we have to increase production. But in order to do that, you kind of need to get the prices higher because that invites more production. I've seen in the last 8 years, the cost to mine silver has gone up 100%, but the price of silver has only gone up 50%. So that part needs to correct. And that's just what happens. In an efficient market, the prices will take care of themselves. The old saying in mining always was, what's the cure for low prices? Low prices. Yeah. And that's what's going to happen to the silver market. How do you get more production? Okay, you're going to have to bump prices up. That'll attract more explorers in, more producers will come in, and then you'll get your supply up. So I think the silver market probably looks very advantageous right now, but I would tell people I would probably split your investments between gold, silver, and platinum. And if they can, try to do it monthly. That's the best way to do it. Accumulate monthly so you're not taking a guess on the market. As far as the next bear market goes, I can see so many clouds above us right now that could cause a big correction. The problem is the bubble could get worse before it corrects. If the Fed does start to cut rates, let's say August or September, they come in, they cut rates. you would assume the stock market would take off. You might have a 5, 6, 700 plus day on the Dow. The bubble is just going to get worse. And at the same time, if you look at the earnings of the S&P, they're really struggling. A lot of companies are not making a lot of money right now.
Yeah.
Layoffs are going up quite a bit. The restaurant industry here in the United States is just taking a beating. So I think if you look at that, there's all kinds of clouds above us. More than likely, what will happen is what's happening all their time. You're going to have something happen from out of the blue. Maybe a terror attack, maybe something out of the ordinary happens, maybe a hedge fund fails, something happens, you wake up Monday morning, it's all over the news, and there it is, and you're going to have a correction. It could be a quick 20, 30%.
Yeah.
But that's normal. You're supposed to have corrections in markets. They're not supposed to go straight up. If they are, then they're not a free and fair market, which is, what it's always supposed to be.
Yeah. How are you splitting your investment between physical metals and gold and silver equities? What's your ratio?
Yeah, 90-10.
90-10.
Yeah, 90% physical, 10. I like the 10%. I probably enjoy more than the 90, but the 90 I'm going to make more money on.
Okay.
I enjoy the 10% because I like researching companies. I like the treasure hunt of it. Sometimes I'll go in, I might buy Nugget, NUGT, because it's a 3-time leverage fund. So I can get the leverage in the gold market without me going on margin myself. And I like the explorers. That's where you can really do your research and find some uncovered gems that are out there. And that part I really enjoy. But I still would split it 90-10. I think the physical metals are the important part of your portfolio, and I would hold those in your hands if you can. Try not to vault them, and certainly don't vault them in a bank.
Yeah. So those 10%, that would be majority, like you said, explorers. What would be the ratio between explorers and, let's say, developers and producers in your
For
portfolio?
me, I think the normal person on the street could go out and just buy like Newmont, and I think they're going to make a lot of money if they do that. And that's the big boy. I enjoy the smaller ones. I enjoy looking at the explorers, and I guess that's just the treasure hunt part of it that I enjoy. Up in the Golden Triangle, up in Canada, it's really amazing what's happening up there. The glaciers have receded about 20%, and the mineralization up there is just off the charts. In my opinion, that will be the last truly great area of mineralization on Earth that is undeveloped still. And the companies up there, their drill results are just off the charts. And we're getting close to the exciting season because right now they have a pretty short season because they're clear up by the glaciers. They're building the platforms now, the drill platforms, and then in July they'll start their drill programs. And that's when it becomes a lot of fun for the explorers, because then you start getting their drill results back. And that's the part I like, because an investor out there, you can have an investor relations guy call you and buy a stock because of that, or you can do your own research. If you do your own research, you want to look at the drill results. What kind of gold and silver are they pulling out? How deep is it? Can they get it out? Is there a feasibility study? I looked at a couple of mines, they had maybe $1 billion in inferred gold in the ground. But after the feasibility study, it was going to cost you almost $1 billion to get it out. So there was no money in it. So you want to look at the whole package of it. What I have found on the explorer side, to me, the important part is top down. I want to find somebody up there that's got a very good CEO in place, somebody I trust, a guy that's got integrity. And you look at their capital structure and you can kind of tell if they have integrity or not, because are they simply printing shares in order to float the company and diluting it into the ground? And so I look for guys like that. There's a couple up there right now I just love, Goliath Resources, Juggernaut Exploration. Both of them, I think they're sitting on massive finds. The drill results from last year were just absolutely off the hook. And all the big guys are in up there. Sprott, McEwen, McEwen's all over the place up there.
Yeah.
And so that's the other thing in mining. You always have that deal, kind of follow the money. If the big guys are going up there, they're not going up there to lose money. They already probably know they're going to make money. They just don't know when, how soon it's going to take. And, the other guys up there, Crescat Capital, you got to take your hat off to those guys. I mean, honestly, I barely know them, but, they went in first before anybody else was even talking about the Golden Triangle, and they started buying up, big pot, 50, like 19, 20% holdings. They're going to make an absolute killing up there in the next 5 years.
Yeah, and not just gold. They're buying copper as well, property.
Yeah.
I mean, they are following and financing copper companies as well, and some other. That I agree definitely, and I would like to ask you about a few names, especially the big ones. If you can say some pros and cons with the big boys. What's your take on Newmont?
I love Newmont. I'd buy it in a second. Now, if I was an investor out there, I'd tell them I'd probably dollar cost average into it and just buy it monthly. That's the safest way to do it.
Okay.
I think Newmont will probably track closer to the price of the gold and silver moving around because they're producers, so they're actually selling gold and silver to the market. The exploration miners, they're going to move around more based off of their drill results because their job is proving out the property. So somebody like Newmont will then come in and buy them.
Yeah.
My thoughts are we're going to have some real shortages in the silver market and the gold market going forward. So the people that have properties that have proven assets in the ground, those assets are going to skyrocket because guys like Newmont, in order to keep their production up, are going to have to find supply. So they're going to search the earth for it. So if you're sitting on a property where you've proved it out and it's there, you're going to get a premium. Your shareholders should get a lot, a lot for their shares. But I think up there in the Golden Triangle, you may see companies bought for, 2.5 billion a piece. It's going to be some big numbers.
Yeah, agreed. What about Barrick Gold?
Same thing as Newmont. I think it'll more track the price of the gold and silver, but I'd buy it in a heartbeat. I wouldn't think twice. Buy it, stick it away. If you were looking at a portfolio of gold stocks you wanted to own, Barrick and Newmont should be your anchors. And then you should probably go from there and buy the exploration miners I like. But I think I'd buy the big boys first and stick them in there. I see no way over the next 10 years you would make an absolute killing in both of those if you just held them.
Yeah. You mentioned two exploration names. Can you name a few more of your favorite exploration plays at the moment?
Yeah, I mean, I guess in the Golden Triangle, Goliath, stock symbol GOT, Juggernaut, stock symbol JUGR. Over on this side of Canada, there's Lorient. Again, they've done a tremendous job of proving out their property. Stock symbol there's LME. I love what they're doing there. They're doing everything right. They're not taking any shortcuts. They're taking their time and they're proving the property out. And that's the part I like. It's not fluff. It's black and white drill results where you can look at it geologically and say, okay, now they've done their work, so I can see what they've got. Down here in the United States, I like Arizona gold and silver quite a bit. I'd say that'd probably be my number one exploration pick down in the U.S. Stock symbol is AZS. Mike Stark is the CEO of that company, a very good CEO, high integrity kind of guy. And that kind of sums up, if I look at those four companies, all four of them have exceptional leadership in place. And that matters, especially in an exploration company, that matters a lot.
Yeah.
So Roger Rasmus at Goliath is about as good as you can get. Dan Stewart, Juggernaut, same thing. Just top-notch guys. Whatever company they were running, they'd run it in the same manner. So you'd be comfortable that they're taking care of the shareholders.
Yeah, agreed. What's your take on gold mining? Gold Mining Incorporated, I mean, the company.
Gold mine?
Gold mining, run by Amir Adnani.
I don't know them very well. My guess would be they're probably going to track along with the market as well. I think you can kind of split all these groups into A and B. A will be the exploration miners, and B will be the production miners. The production miners, I would think they're going to track very closely to the price of the gold, silver, platinum. The exploration miners are going to track based on their drill results. So you can kind of split the two. So anybody that's in production, I'd move them over into the category with Newmont and Barrick and say, if you see the price of gold go up 3 or 4%, you ought to see them track right along, probably a little higher than that, but they're going to track it.
Yeah. What about silver plays? Do you have favorite silver plays and favorite silver jurisdictions?
Well, a lot of the companies I mentioned, they're almost 50-50 gold to silver. So you're going to have silver coming out of them. And I think that's true of most mines. I mean, I know sometimes they almost consider silver almost like a byproduct. I think with the prices coming up, it's certainly not going to be a byproduct anymore. But yeah, I think most of the companies I named are going to have, decent sized silver production there. Both of my mines down in New Mexico are split almost exactly 50-50 gold to silver. And my guess is a lot of mines are probably in that category.
Okay. I will have to quote you again from one of your interviews where you said this 2024 summer will be the best for precious metals in your life. Do you still believe that?
Absolutely. Yeah, I mean, we're set up to the point where you look at it, it's almost the perfect storm. I mean, you've got debt just going through the roof. You've got, geopolitical problems all over the world.
Yeah.
I mean, we only get to see a glimpse of it here in the United States, but I'll tell you what, there's basically a world war being fought. And Africa right now, the Russians, the Chinese, they're all over Africa. The Wagner group, they're moving from country to country over there and creating havoc. If you look at the Middle East, I mean, you got, the Red Sea. I mean, maybe you can take a ship up it, maybe you can't. You take around the Horn of Somalia, maybe you can get around there, maybe you can't. The Panama Canal is in such bad situation now because they have not maintained it very well. The same thing, traffic there is very bad. So all around the world, I see all these things that point towards we're heading for a big problem. And in the United States, as we get closer to this election, it's going to be a zoo here in the United States. If Biden wins, I think gold and silver goes higher. If Trump wins, I think gold and silver goes higher. If he wins, they're going to harass him just like they harassed him last time. And it's going to be an environment of chaos. And that's perfect for precious metals. And if Biden wins, he's going to feel emboldened and he's going to spend more. And debt's going to go higher, which will be good for gold and silver. So I think we're heading into a period where you're going to look like a genius if you buy gold and silver right now, just hold on to it because you're just in the perfect environment. I think we're literally at the exact right sector at the exact right time in history. Fortunes are going to be made in this sector in the next 5 years. Just lives are going to be changed for the better.
Yeah, Thomas, what numbers are we talking here? What do we expect with gold and silver performance price, let's say, by the end of the year?
Yeah, I normally wouldn't be this bullish except for the setup that's in front of us. I see gold, maybe finish the year about 30% higher than we are now in the 3,100 range. And silver better. I think it'll do about 40% from here and finish at about 42. Right now, I think it's sitting right about 30. And same thing in the dollar's case. I see a correction in the dollar that's going to go hand in hand with this. As soon as the Fed begins to cut rates, I think the dollar index will break below 100. And I think you're going to see it, trend down into that 90 area. So I'll tell you, if you see like in that case, about a 10% correction in the US dollar, that has a big effect on precious metals. And it also puts the United States in a real dilemma because as the dollar falls, typically then oil has an inverse reaction. You move the dollar down to 90, you might have oil at 120, 140. And then again, you're in a situation where, you're pulling all that supply of cash out of the economy. So the Fed has to make a decision. Do you worry about the inflation from the higher gasoline prices, or do you keep pumping in liquidity because you have to replace the money the consumers are losing by spending more money on gas? It's a lose-lose situation for everybody except probably the people in the precious metal sector. So I think we're sitting in just an absolutely perfect position. It's a shame to see us go through so much, but I was looking at these numbers, the Federal Reserve, the money supply, what they've done to us. In 2000, we had $4.6 trillion into our money supply. Today, it's over 19.5 trillion. To go up that much in money supply during that period of time, they've just flooded the market with dollars, and they're going to have to do even more of that in the future. And that's a problem for the economy.
And they will, and the same with euro, I believe.
Yeah, and see, that's the part where you can just kind of take the brain work out of it. You don't have to be the smartest guy in the room. You can just say, okay, I can see this right in front of my face. The debt's going higher. So buy gold and silver, stick it away. And every month, if you can, buy a little more. Today, I think gold was down this morning, $30. Now, maybe down like 20. But I would use days when it takes a dip and maybe buy a little extra. But the important piece is be an accumulator. Don't be a trader. If you want to trade, you do that with your 10%, with your stocks that you're buying. The 90%, your core holdings, that's the part you keep adding to every chance you get. And what I would recommend people to do is on their paper holdings, if they do make as much money as I think they're going to make in the next year, take the money you make and then pick a good portion of it and buy additional physical gold and silver for yourself. So use the stocks as a feeder system.
Yeah, yeah. Some experts say the same, buy gold, buy silver, but some are saying buy real estate, as the real estate is a liquid asset. So
Well,
what's your
yeah,
take on that?
yeah. Typically, real estate, especially commercial real estate, there were parts of it that were just, unstoppable. I mean, my entire lifetime, if you bought into a multi-housing apartment complex, you couldn't lose.
Yeah,
However, we've had a problem recently where default rates, distress rates on multifamily housing have gone up from 3.7% in 1 month. They went all the way up now to 7.2%. So 7.2% of all multifamily housing in the United States now is in distress on their funding. And when those go down, that questions the real estate market. It does not turn on a dime. And that's the part people have to understand. Right now, you're seeing some of these places go off at 60, 70, 80% discounts.
yeah,
They could be very good long-term buys, but it will take a while for this ship to turn. It's not like a speedboat that turns on a dime. It's going to be a slow thing where the market's going to crater. It's going to bottom out. You're probably going to see a lot more bankruptcies, and then it'll start to come back up. But I would say if a person had a long-term outlook on real estate, they could pick off some really nice assets as it's coming down and just hold on to them. And if they hold on to them like gold and silver, they are going to do very well long term. It might take a little time.
yeah. We agree that the tough times are coming. What do you think that how will the other commodities perform in those tough times?
I think
Let's
very
say,
well.
let's
Yeah.
say uranium, nickel, copper, lithium. I can count.
The whole basket, yeah, the whole basket, I think it's going to do fantastically well. Uranium may lead the way there. I mean, I'm looking right now. If you want to have clean energy, there's only so many ways you can do it. And clearly, the solar panels, the windmills, they're not going to do it.
Yeah,
Uh, they might be a piece you can add on where you get maybe 5% of your energy supply, but they're not the energy supply. So you're either going to have coal, natural gas, nuclear. And right now, everybody's trying to be as clean as they possibly can. They're all worried about their carbon footprint. So that brings you to nuclear. So uranium should be just a no-brainer. But I
yeah,
think that whole group that you mentioned is going to go up, fantastically well. And I would also add in strategic minerals, companies like Fluorspar. Uh, Same thing. I think it's a no-brainer. And the only way the United States, Australia, Canada can get off their reliance for China for those minerals is to do it yourself. And I think you're going to see real tax incentives come in for those groups in that area. So yeah, I think like a fluorspar mine, that's typically kind of a boring situation. You mainly sell to the steel markets, but it's in a lot of goods. Gore-Tex coats, Teflon pans. I think situations like that may go from being kind of boring strategic minerals to a little bit more exciting. And the other part about it, a lot of the strategic minerals, like fluorspar, you'll find rare earth minerals on the sides of the veins. Now, that didn't matter a whole lot 40 or 50 years ago because no one cared about the rare earths. But now, that can add quite a bit to a mine. So, yeah, I think you can buy the strategic minerals. I think you can buy all the other the metals that you named off. I think you can buy the whole basket of them.
are you
The
invested in any of those?
In the fluorspar, yes. Yeah. In Arizona, we have a fluorspar mine down there. Beautiful. I mean, it's a 50-year generational mine with a refinery. And again, just a nice steady mine. This mine was shuttered in 1974. They had a big fire down there in the town, and about half the mining buildings burned down. And at the time, the Chinese were dumping real cheap fluorspar on our market. So the owner of the mine just padlocked the place and walked away. Had a complete 43101 all in place. And it looks like it's 1974. You walk in, there's beer cans with the pull tops on them. There's Camel cigarettes sitting there. There's newspapers. It's like time stopped in 1974. There's a lot of mines like that. I bet I looked at 200 mines across the United States probably. There's a lot of mines like that. And they're also on the gold and silver side for people that like to buy mines. It's a kind of a sad story, but there's a lot of people that get about 90% through a mine, getting it to production, and they run out of money. Either the owner dies, he got old, and he died, he got sick, he got divorced, or he just ran out of cash.
Yeah.
One mine that I looked at, they were only about 15 feet away from the vein, but they were stuck. They needed to sell the place. So there's a lot of places like that. If people do their research, there's a lot of nice mines that are sitting out there. Now, a fluorspar mine like that, you can hook up with a steel company and they'll probably take 100% of your production. And I think that's what's probably going to happen to ours down there. More than likely, 100% of it will go into the steel making process.
Yeah, we mentioned uranium. Any investments in uranium?
I don't, because I'm a dummy. Yeah, I think you look at maybe like a Sprott uranium fund. Yeah, Sprott is just all over uranium. They love it.
Yeah.
So that's probably the easiest play right there is just to go ahead and buy the fund from Sprott. I saw something rather interesting the other day with the Sprott funds out of Europe. They're blocking Europeans now from
Yeah.
buying. That is insane, that
Yeah.
they will allow them to sell but not buy.
Yeah. 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 Yeah.
And again, then you turn around and you say, geez, we have a free and fair market. Well, how is that free and fair when you only allow one side of a trade?
Yeah.
It doesn't make a lot of sense. But I think it has to go hand in hand with the fact that they just set an all-time high for bullion banks. They're short positions on gold. And I think that they're so exposed right now and so afraid that gold might bump another 10% and cause them to cover that maybe they work that deal out where they're trying to slow the inflow of cash into the funds, which is not a very fair market. But I mean, my experiences with them over the last 20 years, there's always manipulation in the gold and silver market, but they can only slow a movement one way or another. They can't change it. So, as gold is just going to keep going up, it's going to keep tracking the debt no matter what the governments try to do, no matter what the COMEX does or the LME, it's not going to matter. Really, I think Shanghai is probably stealing the price of, the control of the pricing of gold and silver anyway. It appears to me they're going to make the market here very soon if they're not already.
Yeah, agreed. What's your take on central banks' record gold purchases? Will that continue?
That's probably the only nice thing I'd say about a central bank. Yeah. I think absolutely their gold is going to continue to be purchased. And if anybody wonders why, I mean, I guess we can point the finger at the United States for that. I mean, when we went in and froze those Russian assets, we sent a message to the world that, hey, that financial system isn't really safe. We can just go ahead and take your assets. And look at India. They just repatriated a whole ton of their gold back to India because they want it in their hands. The Venezuelans ran into that with England a few years ago. They wanted their gold back, and England said no, and they've never returned it to them. Why you would ever let someone else hold your precious metals? You're crazy because you give the power up to them. So I think central banks will buy more. I think they'll hold it in their home countries, and I think it's a way for them to stabilize their currencies. And also, from an asset point of view, why would you hold dollars that are depreciating versus gold or silver? Even if it stayed stable, it's a good use of your funds.
Yeah. Final question. What do you think about cryptocurrencies? How will they perform?
I looked at Ethereum the other day, and I'm not much of a crypto guy. I think, to me, cryptocurrencies are a trade, gold and silver are an investment. So I separate the two of them. But it's a fantastic trading vehicle because of the amount of volatility in it. The news a week or so ago about Ethereum with their ETF being approved. If I was going to buy one crypto, I'd buy that one, ETH, because I see that as having an actual a banking connection to it, where they're going to use it in the backbone of the banks. And if I understand Ethereum correctly, I probably don't understand it that well. It reminds me a little bit of Cisco during the dot-com bubble. Cisco didn't care who won the internet fight. They just wanted to build it, the backbone. And I think that's going to be Ethereum. They're not going to care what banks survive, which ones fail. They want to control the backbone, the technology of it. And that should be worth a lot of money. So if I was going to buy one of them, I guess I'd buy Ethereum, but I'm certainly not a crypto expert.
Okay. That was Thomas Parilla, president of Parilla Investment Group. Thomas, thank you for coming to my show. It was a great chat, and I hope we will come again soon. Thank you.
Absolutely. Thanks for having me, and have a great week.